Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 19th, 2025, and we're diving into Healthcare Realty's latest earnings report for the fourth quarter of 2024. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Healthcare Realty, a leading REIT specializing in medical outpatient buildings, has just released their Q4 2024 earnings. There's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the financials. Healthcare Realty reported a net loss of $106.8 million for Q4 2024, translating to a diluted EPS of 31 cents. However, their normalized FFO per share was $0.40, which is at the high end of their guidance. John, what does this tell us about their profitability?
Despite the net loss, the normalized FFO per share of 40 cents indicates strong operational performance. This metric is crucial for REITs as it excludes non-cash items like depreciation, providing a clearer picture of cash flow. The quarterly dividend of 31 cents per share also reflects their commitment to returning value to shareholders.
Operational efficiencies and future outlook. Healthcare Realty has shown operational efficiencies with a cash NOI growth of 3.1% in Q4. They also signed new leases totaling 686,000 square feet. How does this position them for the future?
Their ability to maintain cash NOI growth and secure new leases is a positive sign. It shows resilience and effective management, especially in a challenging market. Their leverage ratio of 6.4 times net debt to adjusted EBITDA is manageable, and their 2025 guidance for normalized FFO per share between $1.56 and $1.60 suggests confidence in continued growth.
Capital allocation and strategic initiatives. Healthcare Realty has been active in capital allocation, closing joint ventures and asset sales worth $522 million in Q4. They've also repurchased $510 million in shares. What does this indicate about their strategic priorities?
These moves highlight a strategic focus on optimizing their portfolio and returning capital to shareholders. The share repurchase program reflects confidence in their valuation, while the repayment of a $350 million term loan strengthens their balance sheet. Their occupancy rate of 86.3% is solid, indicating effective property management.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 39 cents, but the actual diluted EPS was 0.31. However, the normalized FFO per share was 40 cents. How should investors interpret these figures?
The EPS miss is concerning, but it's important to focus on the normalized FFO, which met expectations. This metric is more relevant for REITs as it reflects core operational performance. The mixed analyst sentiment likely stems from the discrepancy between EPS and FFO, but the latter's strength is reassuring.
Leadership changes and governance. There have been significant leadership changes at Healthcare Realty, with Connie Moore as interim CEO and Austin Helfrich as the new CFO. How might these changes impact the company?
Leadership transitions can bring fresh perspectives and strategies. The appointment of experienced individuals like Connie Moore and Austin Helfrich is promising. The board refreshment with 4 new directors and the ongoing CEO search indicate a proactive approach to governance and strategic direction.
Key takeaways. In summary, Healthcare Realty's Q4 2024 results show a mixed performance with a net loss but strong normalized FFO. Their strategic initiatives and leadership changes position them for potential growth. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Healthcare Realty's performance. Their focus on operational efficiency and strategic capital allocation is commendable.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Healthcare Realty's performance in the comments below.